Are you a sole trader working as a contractor, a consultant, or a freelancer? Do you offer products or services that are based mainly on your personal skills and labor? If so, the income that you receive may be classified as personal services income or PSI. What's up, tax fam? The ATO has some special rules on how to treat PSI. But despite the fact that these rules have been around for some time, so many small businesses and contractors are either unaware of the rules or don't fully understand them. Davey did a video on PSI and went into a lot of detail, but we still get so many questions about what is PSI. The ATO has also released a new tax ruling to explain their view on how PSI works. Tax Ruling 2021 D2. I will include a link to this in the notes below. So, I thought I'd answer some of the most common questions our clients ask us. Hopefully they'll help you figure out whether PSI rules apply to your situation or not. And if they do, how can you go about navigating them? Let's jump straight into the first one, which will set up the foundation for the rest. What is PSI, and is my business impacted by PSI? So basically, if you're earning money through contracting your labor, skills, or expertise, you are earning PSI. In other words, if you're not selling any goods, you are earning PSI and will be impacted by the PSI rules. A few good examples of industries and careers that are most commonly affected by PSI rules are IT consultants, medical practitioners, engineers, accountants, lawyers, recruiters, and mortgage brokers, just to name a few. This is because the work in the industries listed requires labor, skills, and expertise to provide the service. And these industries do not sell physical inventory or goods. Generally, if you earn personal services income, you will be regarded as being in the same position as an employee for tax purposes, which means you get taxed at your personal marginal tax rate. This leads me to the second most frequently asked question. Am I able to create a company or a trust to reduce my taxes? The company tax rate is 25%, whereas the individual tax rates can end up going as high as 45%. So it is quite common for people to want to set up a company and retain the profits within the company to benefit from the 25% tax rate. That's actually why the ATO introduced PSI rules in the early 2000s, because people were sidestepping their individual tax implications by sheltering their PSI in a business structure. So, if you're earning PSI, you have to conduct a PSI test to see if you're a personal services business or PSB. If you pass the PSI test and you're considered a PSB, you will need to pass an additional test, which is called the General Anti-Avoidance Rules, otherwise known as GAAR, which states that your dominant purpose for restructuring cannot be for tax purposes. If you pass these tests, then the good news is that you can implement legal tax strategies to minimize your taxes. If you do not pass these tests, you cannot benefit from the company tax rate of 25%, and you must attribute all your income to your personal name and pay the taxes based on your personal tax rate. If you want to learn more about how PSI rules work and how they apply, we go quite into a bit of detail in this video. Some people set up a trust structure because trusts are able to split the income amongst multiple people or companies to reduce the overall taxes. Unfortunately, if you do not pass the PSI test, the income must be fully attributed to the person performing the principal work. But it is still worth noting that there are still benefits to starting a company even if you earn PSI. For example, some businesses only deal with companies and not individuals, and won't give you a contract if you do not operate under a company. I would advise to speak to an accountant about the best structure for your business. Okay, on to the next question. Can I pay wages to an associate, and will the wages be tax deductible? The answer to this question depends on a few things. Firstly, we have to understand what principal work is. Principal work is the work that gets done under the contract that essentially generates the PSI. If you pay wages to an associate to help with the principal work, it will be tax deductible. On the other hand, non-principal work, which is incidental or subsidiary work that is not central to the main work for which the business gets paid, the wages as an associate aren't tax deductible. The wages for jobs like bookkeeping for the business, issuing invoices, secretarial duties, and running the home office are considered non-principal work, so they will not be tax deductible. Confusing? Let's look at an example. Peter provides marketing consultancy services through his company, PM Co. Proprietary Limited. The company's sole income is Peter's PSI. Peter's wife, Jamie, does some work for the company on the side, such as inputting daily sales data into spreadsheets and issuing invoices, banking receipts, and administering the home office. Peter uses the data in the spreadsheets to prepare recommendations and reports. So the inputting process that Jamie does is considered a requirement to fulfill the obligations under the contract. This forms part of the principal work. On the other hand, issuing invoices, banking, and administering the home office isn't principal work. So, Peter can claim a tax deduction for part of Jamie's wages attributed to inputting the data, but he cannot for the part attributed to general business admin. Question 4. Can I create a company with a friend to meet the PSI 80-20 rules? For context, the 80-20 rule is part of the ATO's PSI test. You cannot pass the 80-20 rule if 80% of your income is derived from one single customer, which means that the PSI tax rules will apply to your income and will be taxable to you. I'm not gonna lie, I've heard some pretty creative stories about ways to meet the 80-20 rule. For example, one of the most common ones is to set up a company together with a friend and bring both contracts to the company. This, however, would not work, as the ATO is extremely strict on the general anti-avoidance rules that I mentioned earlier. These rules state that the dominant purpose of a structure cannot be for a tax benefit. So if you're setting up a company with a friend for the primary purpose of avoiding the 80-20 PSI rule, the ATO will definitely catch on, and the income of each contract will be attributed to the individual who conducted the principal work. Let's take a quick example. Sam is contracted with Telstra and earns $200,000. Bob is contracted with Office and earns $150,000. Sam and Bob decide to start a company together and are both shareholders in the company. The $200,000 income that Sam earns must be attributed fully to Sam's name, and the $150,000 income that Bob earns must be attributed fully to Bob's name. So none of the profits can be retained in the company. Having said that though, the operating costs of running the company together can be shared, which can save both Sam and Bob some money. So let's write off the entire idea of starting a company. Chat to an accountant and see if the setup makes sense for your circumstances. But you do have to pay out the profits to each shareholder or principal if you do start a company. Next up, this question is similar to a previous one, but I'll give you the answer anyway. If I earn PSI, is it possible for me to retain profits in the company and enjoy the 25% tax rate? Yes and no. So as long as you pass the PSI and general anti-avoidance rules, if you run a business, you can retain profits within the company to reinvest in your business. In simpler terms, if you meet a certain criteria, then you are deemed to be running a personal services business and can enjoy the benefit of the 25% company tax rate or distribute your income through a trust. This criteria includes: you're running a genuine business. Your dominant purpose of your structure is not to obtain a tax benefit. You operate in a business-like manner. your income is variable. Whether the income paid to the individuals relates to the skills and expertise provided to the business. There are marketing expenditure, your business income and clientele grow year on year, and you hire more staff over the years. The ATO provides a lot of examples in the Tax Ruling 2021 D2, so best to check that out. There is also a worked example in the Tax Ruling 2021 D2, example 40, involving a computer systems analyst who provides personal services income through a family trust, which then distributes the income to the individual's wife and his 3 children, who are in the lowest marginal tax bracket. The ATO concludes that a likely conclusion where the dominant purpose of the arrangement is income splitting, for which Part 4A, the anti-avoidance rule, apply, meaning that it won't be acceptable for you to distribute profits of a personal services business to low-income earners who do not work in the business. Question 6. What deductions can I claim? You can only deduct expenses incurred in earning your income, such as insurance, home office operating expenses, depreciation of income-producing assets, bank fees, and tax-related expenses such as the cost of preparing and lodging your tax returns or activity statements and meeting the GST obligations. As a sole trader, you can claim deductions directly against your PSI on your individual tax return. And if the PSI is earned through a company, partnership, or trust, the business reduces the amount of PSI that it attributes to you by the amount of deductions. You can't claim expenses that are capital, domestic, or private in nature. For example, you can't claim rent, mortgage interest, rates, and land tax for property if those expenses relate to your PSI. And the last question for today, how could an accountant help me if I earn PSI? An accountant can guide you on what structure would be suitable for you and compare the cost. Often, PSI earners are approached by payroll businesses with thick contracts, which can be very daunting to sign. We can guide you to make sure that you're getting the best deal and also going into the right structure. Help you set up wages if you hire an employee to conduct principal work, and help you navigate through tax deductions available to you. So, I would definitely recommend speaking to an accountant. But I hope you found this video helpful and got some of the answers you needed. If you have any more questions about PSI that you would like me to answer, feel free to drop them in the comment section below. Otherwise, you're welcome to get in touch with an accountant from the Box team for a free consultation about your PSI needs. And of course, don't forget to like and subscribe for more tax accounting insights. See you next time!